We, of course, had the money supply and credit extension numbers out today. With regards to money supply, coming down from 8.2% year on year to 7.6% year on year in Feb, and credit extension numbers also quite interesting to note that we saw a nice uptick there from 5% to 5.4%. Can we get excited about these numbers?
I think those numbers show that we are still in a fairly stable environment. I don't think we can get too excited about them. In fact, when one is talking about the fear of inflation that you have just touched on as a concern for the governor of the Reserve Bank, the fact that money supply has not grown as much in Feb as it did in Jan is not a bad thing, because as you're aware, inflation is not just a problem we are facing in South Africa, it's a global threat at the moment to the recovery. As far as the credit figures are concerned, we are still very far from the kind of extension that we saw prior to the crisis, but it's good to see that there is some slight increase.
Sheshi, it's quite fascinating. I mean, looking at the money supply figures, only when we hit double-digit growth, and of course credit extension hits double-digit growth, can we actually say that we will see a significant impact on the CPI reading. Is that the right way to look at things?
Well, the CPI reading came in at exactly the same level in Feb of 3.7% as it did in Jan.
And this is despite food prices increasing and petrol prices also on the rise. Exactly.
In fact, what seems to be pushing that inflation rate up more than anything at the moment is administered prices. Food inflation, we haven't had the kind of impact that we've seen in other parts of the world. Our food prices have remained really stable, which is good. The strong rand, I think, has also been a bit of a cushion to the inflationary pressures that would have come through from the increase in petrol prices as well.
Well, let's touch on consumer demand at this point in time. Credit extension numbers, I mean, we have seen an uptick. We've spoken about this. To what extent can we see double-digit growth when it comes to this? And to what extent has the National Credit Act, which we know was implemented in 2007, had a dampening effect?
Well, I think more than anything else, what is having a dampening effect on those figures is the fact that the consumer is still under significant weight from debt that was accumulated prior to the crisis. So you speak of the National Credit Regulator, we have the National Credit Act. One of the things that the regulator does is keep figures of credit impairments, and we saw that at the end of last year there was a marginal increase in December compared to September. So the appetite for credit among consumers will remain somewhat subdued as long as we have this significant weight of debt weighing down on households.
And of course, savings rate in South Africa leaving much to, of course, be desired at this point in time. For as long as consumers remain weighed down by debts, tell us about how that is going to impact overall GDP growth in the country.
Well, savings is critical for growth. We save as a nation, whether it's government, the corporate sector and households, in order to have resources to undertake investment. As you've said, our savings rate in South Africa is not particularly good. One of the reasons for that is that we don't have, well, at least up till now, have not had much of an incentive to save, because credit has been pretty much readily available. Now, you talk of the impact on growth. In the short run, the availability of credit would tend to stimulate growth. But what we've seen with the recent recession is that over a long period of time, that credit gets to an unsustainable level. So what we need is, we actually need to fundamentally begin to reduce our debt levels so that we can have a more sustainable long-term growth path.
And of course, unemployment plays a very integral role here as well. I mean, we know that unemployment is above 25%, but when you look at unemployment below the 30-year-old level, that is a dire situation. We're looking at unemployment rates of around 40%. Is that right?
Yes. Well, if you look at unemployment in South Africa, it's very much a youth unemployment crisis, whereas you've rightly pointed out 42% for those under 30, and you're looking at about 17% for those over 30. Now, when you link that to credit extension, clearly your ability to get credit depends on whether or not you have a job. But if at the same time unemployment is skewed towards the younger people, those are people who may never have had a job in the first place, may never have had a credit record to speak of. So we are really speaking of credit more in terms of those who've been in the labor market for a long time, that have been able to create some kind of credit history.
Sheshi, okay, let's look at what you're expecting in terms of growth in South Africa going forward. We were talking about consumers, and consumers account for 60% of GDP here in South Africa. If we don't see a significant recovery, which is quite interesting because retail sales have recovered quite significantly, what kind of trends are you expecting going into the year?
Well, I think we've had this shock coming out of Japan, which is going to affect the whole global environment. We've had the crisis in North Africa and the Middle East, which also will affect the global environment. And South Africa tends to track global growth very, very closely. So, you know, with those two factors, as well as the fact that our own domestic consumer remains weighed heavily with debt, with the prospective possibility of administered prices continuing to rise, so those inflationary pressures coming through, I don't think we will see growth in 2011 in excess of about 3.5% or so.